Lee Gallagher, Scott Dwyer, Gary Kaltbaum, and Peter Schiff are joining us to talk about all of this. Okay, Lee, Ben Bernanke has found God. He's talking about inflation suddenly.
Sure, he's got inflation on the brain, and he's right too. And I agree with what Michelle was saying. I mean, if he had said this 6 months ago, can you imagine? Everybody would have gone crazy if he had remotely signaled that he was close to stopping cutting interest rates, which is all he's saying here. He's not talking about raising interest rates just yet. I do think that the Fed thinks that the global credit crisis was the greater risk to the economy. We had Timothy Geithner in our offices this week, and he said, it takes a series of serial sustained mistakes to not control inflation, and we've got it under control.
Well, and Gary, to Lee's point, a year ago, a lot of people, including folks at the Fed, were wondering whether this subprime thing would be contained to just a small segment of the mortgage population, would never spill over to financials.
Look, I just go to my biggest problem with the Fed. I think they're great at reporting the news after it's already happened. They've been wrong most of the time. And I've got to tell you, for him to have a straight face to say that inflation's only in the 3% range when DuPont just raised prices 20% and everything we buy has skyrocketed, and let's not even mention oil prices, is just absolutely insane. It flies in the face of anything we're seeing in the real world.
Peter, I know that you would argue certainly that the very policies that the Fed put into place to deal with growth, i.e. cutting rates and adding liquidity, have caused this inflation.
Well, sure. Ben Bernanke is an inflation creator. He's not an inflation fighter. But a couple of interesting points. About 6 months ago, when Congressman Ron Paul specifically told
Your
Ben
man,
Bernanke,
by the way,
right, that the weak dollar was causing prices to rise in the United States, Ben Bernanke said no. He said the weak dollar only hurts Americans if they travel abroad. Yesterday, he changed his mind and actually acknowledged that the weak dollar is causing prices to rise and causing inflation expectations to rise. But then today, when he made these nonsensical statements at Harvard, I mean, first of all, he said, he said that we don't have the wage price spiral like we had in the 70s. Well, first of all, the wage price spiral didn't create the inflation in the 70s. It resulted from it. Wages rose as a result of inflation. The problem now, and the reason it's worse, is we have prices spiraling out of control, but not wages. Right. So it makes the inflation even worse for the average American because his paycheck isn't rising.
Although part of that has led to an increase in productivity.
Let me make a prediction right here. Now that the Fed is worried about inflation for the first time, commodity prices have peaked, and they'll be coming down. We have probably peaked in terms of prices of commodities. Now, this all has to work through the economy, and it's going to be very painful, but I don't think the Fed can raise rates for a long time, maybe years, because now the Fed owns $400 or $500 billion worth of junk paper that was sold to them by the investment banks.
And
so he's stuck.
Michelle, I'm with Scott on that. I think that they are in no position, because of the position they put themselves in, to start raising rates. They may stand pat, which I believe is what the Fed funds futures pits are betting.
Well, actually, the Fed funds futures are still pricing in a rate hike by year end and pretty aggressive hikes in 09.
But for June 24th, I'm talking about.
Oh, yes, absolutely. But I have to say, I think the idea that they'll be hiking by year end is also very aggressive. I mean, it's sort of along the lines of what you're all saying. The position that they're in, the elections on the margin, I think all these things come together to argue for the Fed standing pat and having to wait longer than perhaps would be recommended.
Scott, amend something.
Let me just make a correction.
The Fed didn't buy.
They don't own it. Yeah. They're being they're it's a lending facility. But the problem is, who are they going to sell this to at the end of the day, in a year or 2 years? This is a borrowing facility. They're holding this paper.
UBS is able to sell some of this paper at a discount, at a heavy discount, but they're able to sell it.
Okay, so who are they going to sell it to? But that's a whole other issue. But it is a lending facility.
It goes back to a bigger point here, whether the Fed has control of anything they do. I mean, we're seeing Lehman blowing up here, even though everybody's been borrowing tens of billions of dollars. I just don't think the Fed has their pulse on anything, and I think they're just late in the game.
Peter, last word.
Another big thing that Bernanke said, he said that we're not as dependent on oil anymore. It's a smaller part of our GDP. That's a classic mistake that everybody makes, because now we import all the things we used to make. Back in the 1970s, we didn't have a huge trade deficit. Now we do, because all the oil that's used to make the stuff we consume is used abroad, but it's in our trade deficit, and it's hurting us.
Here's a look at what's